Welcome to this explainer. Look, today we are going to do a total mindset shift. We're distilling the core psychological concepts from Morgan Housel's incredibly powerful philosophies on wealth. We're moving completely away from viewing money as just some strict math problem on a spreadsheet. Instead, we're going to start understanding it for what it truly is, a deeply emotional discipline.
We've got 5 key areas on the agenda for today's analysis: your financial DNA, time, patience, and compounding, the power of enough, understanding tail events, and finally, redefining true wealth. Let's just dive right in.
All right, Section 1, your financial DNA.
So first things first, let's just completely toss out the idea that money is purely logical, because it's not. The truth is, your financial habits are deeply, deeply rooted in your upbringing, your environment, and your past experiences. It's highly personal. There's actually a concept in behavioral finance called recency bias. Think of it literally like physical DNA, but for your finances. If you watched your parents struggle with bills growing up, or if you've personally taken a massive hit in the stock market before, you are incredibly likely to carry that fear right into your future investments. And this happens regardless of what the hard data is telling you, simply because our past experiences kind of haunt and shape our future decisions.
And because of this, we constantly judge people, right? We see someone dropping lakhs on luxury brands like wearing head-to-toe Gucci or Prada, and we immediately say they're wasting money. But then, on the flip side, we'll look at an overly conservative person and judge them as a cheapskate. We do all this without ever realizing that everyone is honestly just acting out their own unique financial DNA based on how they were raised.
The source actually brings up a really fantastic personal anecdote here. Imagine being in college and making the choice to ride a super simple Passion Pro motorcycle while all your peers are showing off these flashy KTMs or Royal Enfields that their parents paid for. Refusing to cave to that social pressure, refusing to just look cool on your parents' dime, that is a massive realization. So it really makes you ask, what was your life's turning point? What is the genuine core reason driving your own financial pursuit?
Moving right along to Section 2, time, patience, and compounding.
Okay, so Warren Buffett, we all know he's famous for his immense wealth, right? But here is a wild reality check. He only accumulated $1 billion during the entire first 60 years of his life. 1 billion. But then, by simply holding his investments and letting time do the heavy lifting, his wealth absolutely exploded past $100 billion in his 90s. The magic isn't just in having the money, it's about giving the investment decades to exponentially grow. Patience and compounding, they really are the absolute kings of wealth building. To see this mathematical explosion in a more modern context, the source looks at historical crypto launches. Just imagine a hypothetical early investment of 10,000 rupees in Bitcoin or Ethereum back when they launched at around the $0.003 mark, which is roughly 15 paise. The growth is just phenomenal. Seeing Bitcoin reach valuations over 83 lakhs and Ethereum pushing past 2.7 lakhs perfectly illustrates how tiny initial stakes, when given time and a rapidly growing market, can morph into literal multi-crore valuations.
Now, to explain how modern investors actually access these highly volatile markets, the source points to platforms like CoinSwitch as a prime example of today's trading infrastructure. They highlight features like up to 25x leverage on futures, over 350 contracts, and a 15-day fee rebate for new users. But crucially, to demonstrate how the current ecosystem focuses on security, the source cites their proof of reserves, holding 214.2 crores against 192.1 crores of customer funds, as well as their recognized status by the Financial Intelligence Unit.
Which brings us to Section 3, the power of enough.
Ever feel like you are just endlessly chasing the next big thing? Well, there's a name for that psychological trap. It's called hedonic adaptation. It is this exhausting cycle where achieving one financial milestone immediately creates an overwhelming desire for an even bigger milestone, which completely prevents you from ever feeling true satisfaction. We falsely convince ourselves that hitting our first 1 lakh, then 10 lakhs, then 10 crores will finally be the thing that satisfies us. But without definitively setting an end goal, this treadmill literally never stops.
Because here is the secret. True happiness actually stems from contentment, not just unlimited wealth. This is exactly why a modest middle-class family that successfully meets their basic needs and manages to save a little often feels infinitely more successful and happy than a totally exhausted, high-earning individual who is just constantly stressed out chasing new, ever-increasing financial targets.
So, I want you to pause for a second and really ask yourself, what is your exact definition of enough? Think of a genuine, realistic number
an amount that would fulfill your needs, let you live comfortably, and not drag you endlessly back into the rat race. Defining this number, that is your very first step to actual financial freedom.
All right, Section 4, Understanding Tail Events.
History shows us time and time again that outsized successes are usually unpredictable tail events that heavily reward the most patient investors. Think about Amazon for a second. It was just an idea for an online bookstore that quietly survived the absolute bloodbath of the dot-com crash, and then it exploded into a massive global empire. Or think about the sudden, completely world-changing rise of AI or electric vehicles. These exceptionally rare events are what disproportionately shaped the global economy.
Yet we so often miss out on these incredible tail events. Why? Because of negative bias, or basically pessimism. This is our natural psychological tendency to focus way more heavily on the fear of a negative outcome than on the joy of a positive gain. For instance, panicking and locking in your losses during the 2008 financial crash, instead of staying calmly invested. Remember legendary investor Peter Lynch's advice to just ignore the noise, or the people who patiently held on to early Tesla stock through all the heavy criticism back in 2010.
So honestly ask yourself, do you make your financial decisions based on hard facts or just temporary feelings? Because the true difference between an average investor and an extraordinary one is simply having the adaptability and the patience to ignore the market noise, manage the fear, and let pure logic dictate their actions.
Finally, we reach Section 5, Redefining True Wealth. Let's compare two totally different lives. On one side, we have the rich illusion. This is the person losing sleep over massive EMIs for a Lamborghini or a Rolex. Sure, they project wealth, but they actually have zero freedom and immense daily stress. On the other side, we have true wealth. This is the quiet saver. They drive a basic car, save 30% of their income, live totally debt-free, and most importantly, they have absolute stress-free control over their time and decisions. You see, wealth isn't what you see, it's the unspent options you hold.
But to get to that level of true wealth, you absolutely must understand opportunity cost. This is the unavoidable trade-off where choosing one short-term action directly means sacrificing another long-term outcome. Literally every single financial choice has a hidden price tag attached to it. It requires you to sacrifice short-term pleasures if you want to eventually achieve long-term autonomy.
Whether it's a student choosing to skip weekend parties to stay in and build their skills, or a founder grinding away on their startup and temporarily giving up family time, reaching that top 1%, it always demands paying this very real, very difficult price. Yes, there's a huge long-term reward, but that short-term cost is totally mandatory. As we wrap up this explainer, I have one final question to leave you with. What short-term pleasure are you genuinely willing to sacrifice today in exchange for your absolute freedom tomorrow? True wealth is all about choices, and your choices start right now. Thanks so much for joining me for this breakdown, and keep seeking that financial clarity.